Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the continued market sell-off, Avatar's box office miss, and the math behind Roth conversions. Before we begin, as a reminder, this is a financial education presentation and should not be considered as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The market is now down 9 of the last 12 days. Are we on our way to new market lows?
Hey, good morning, everyone. Good morning, Allison. And hopefully everyone's holiday season is going well. And if you're waiting on kids to come back home, hopefully they're coming back this week to be able in time to celebrate Christmas and New Year's. But who's not celebrating Christmas and New Year's? The market is not at all. So here's a live look. We're about a half an hour after the market opened this morning. Live look at the market. Everything's in the red. We were, going into today. It was 9 of 12 down days in the market. So what's happened mentally is we've had all the rate hikes. And prior to last week's 50 basis point rate hike, there was negativity going into the rate hike of it may not happen and may not decrease to 50 basis points. And then certainly after it happened, I thought the market would celebrate that because that is exactly what we've been expecting for a long time, is inflation to ease slightly and the rate hikes to ease. So we're getting exactly what we expected and exactly what we wanted, but the market's selling off anyway. So why? Well, I would say there's increased rhetoric, even though the Fed, I think personally, is doing a good job of saying, hey, we're going to do what it takes to, kill inflation. So they're kind of doing their job, if you will, and saying, hey, be ready that this is going to cause you some pain. I don't know. I thought the market would kind of be over it. It's not. So what's happening? There's a lot of rhetoric out there about not only that we're going to have a recession, but the mother of all recessions, and the typical negativity that gets a lot of press time. Scare tactics, if you will. A lot of financial firms use this as marketing, right? They try to scare you into coming on board. Hey, look at that. A little bit of green while we're talking here. I like it. Trying to scare you to come on board. And I don't believe in that. So really, you got to kind of back out and think really what's going on. This is the same problem we've had all year with 2022 is we have increased inflation. The cure for that particular disease is we're going to raise rates. The Fed has been very clear as to what they're doing and how much they're going to do it, and stuck by their word. So overall, I am not concerned. However, the question is, does this mean does the current negativity in the air take us to new lows? Well, let's look at the chart, right? Because that can kind of explain of where we are, where we've been. This is the NASDAQ 1-year chart that's up here. We had the lows mid-June. Then we revisited those lows mid-October and then at the beginning of November. So really 3 times we bounced off an area that we're almost back at, to be honest. So really we're only a couple percent from new lows right now. So we're certainly in the vicinity. I didn't think we would break new lows, but I have to now say, all right, well, let's have a plan for if we do, right? You hope for the best, plan for the worst. That's military planning 101. So really kind of taking a look about, will the negativity take us to new lows? And if so, what changes need to be made? That I've been optimistic about the market holding this level, but I've still held the large positions and buffer in your portfolios. King is another position that once the all clear sounds and we start going back higher, you'll see me sell out of that. So even though we've had good news and had some run ups, we're still have the defensive names in there as well. Also, we're loading up on CDs, which are now starting to hold their value. Initially, when we bought a few of those, they dropped from their $100 par down to 90s fairly quick. Now they're hanging right around that 100. So really CDs that have stabilized. So if you're interested in that, reach out and talk to me. But overall defensive, what's the strategy? Defensive mechanisms stay in place. I'm optimist by nature, but also a realist, knowing that the market could fall further. So no plan to move those anytime soon.
Next, Disney stock was hammered yesterday after Avatar 2 missed expectations this past opening weekend. What's your take on Disney stock?
Yeah, so this is a headline from yesterday, and we didn't get a show out yesterday. We're recovering from being gone for the weekend, but Allie and I and the family saw Avatar this weekend, and people are like, "Well, how was it? Should I go see it and all that?" And well, I mean, the the message is a little tough for me, right? Being career military of military bad, government bad. U.S. bad. I mean, there's a lot of woke / political overtones on this thing, but separate all of that out. I mean, it's a cool movie. Watching the blue creatures and all the amazing stuff they can do, and all the CGI behind all of it is pretty amazing. However, honestly, at the end of the day, it's about the story. The story needs to be intriguing and compelling, and there should be a surprise or two, a twist or turn, to make any good movie, right? There's none of that. It's the first one all over again. I mean, it was literally repeat, to the tune of 3 hours and 6 minutes of being on repeat. I did stay awake for the whole thing, but I was going into it expecting that if it's just a repeat of the first one, I probably will, catch up on some sleep while I'm in there. But overall, I think the word gets out pretty quick when a sequel is not, substantially different from the first one. So that hit Disney stock yesterday to the tune of 5%. Sent it down to a 52-week low. Now Disney's down 40% over the year. So it's got some problems out there. There's Iger returned as a CEO. I'll kind of wrap it up with here. I like it because it sold off so much, right? So when you look at all the negativity that's in the air with Disney, and the fact that during COVID it killed off its dividends, you're not getting anything for holding the stock. But when you really look at it, I mean, it's a premier brand. Now that it's down in the mid 80s, is it time to buy? Probably not yet, but it's certainly something that I do want to get back into as a core name for Ankerstar Wealth. I would like to see it fall a little further, maybe down in the 70s, but at that point, I think you can't ignore that this is just too good of a stock under good leadership returning. Multiple ways to win. You have parks, you have movies, you have merchandise. ESPN, ABC, all those follow under the the Disney hat. Could it be a little better off if it started splitting things off? I think it could. But all in all, I think we just need to sit here and watch Disney stock continue to fall, and then at some point it'll turn into a buy.
Last, Roth conversions allow you to pay taxes now and not have to pay taxes again. How do you determine how much to convert?
Well, so the mentality here, and we have this conversation nearly every day, from whether you've had an IRA for decades or whether you're kind of new to it, is there's two options, right? Traditional allows you to save on taxes now. Roth, you pay taxes now, but don't ever pay taxes again. Both are significantly better deals than just keeping cash in the bank, right? Or into a taxable brokerage account where, every penny of interest that comes in is taxed year over year. So both are good. Which one's better? Well, that depends, and that you could do an hour-long TED talk on getting into the math. But all in all, if you think that in the future, if there's a period where you're going to take a sabbatical or not work or significantly reduce your income for good, then you would want to wait. But if that's really not going to happen, I would say that's not the norm, right? Most of us go through life, and your skill set that in expertise that you develop commands a higher salary, kind of the more experience you get up to a point. And then either, the world moves beyond us, if it's, tech, that sort of thing, or, or you don't want to work anymore, or, health issues crop up where you can't work anymore, that sort of thing. So most people are making more money throughout their life. And then when they retire, if they've been diligent and prioritized saving and investing, then you have all these accounts that are all of a sudden now kicking off a bunch of money. So you're taxed as much in retirement as you are, but while you're working, which is kind of crazy, but that's a good thing. Having tax problems is a good thing. That means you have assets generating those taxes for you. So going back to the Roth IRA, if you have both and you want to convert, generally the time is now. So there's if I don't have this big income drop off in the future, which most people don't, then you come back to present day and you say, our taxes bracket's going to be higher or lower in the future. I don't have a crystal ball. I can't tell you with 100% certainty, but I can tell you with 100% probability that they're going to be higher because they're historically low right now. Kind of back when, it's the same math of back when people are, gnashing their teeth and wringing their hands over, do I refi at 3% to my home mortgage or 2.875, and all the stress of that, and should I wait? Well, now it's at 6+%. So, I mean, you at some point you have to go kind of like, who cares, make a decision and move on. Because was it critical whether you got 3 or 2.87 when now it's at 6? No, you would kill for those rates, right? So kind of if you wait on the tax code and taxes now go higher, you're going to look back and go, why was I being, why was I spending all this time trying to figure out or wait or, not doing my Roth IRA conversion when now it's going to cost me a heck of a lot more, right? So, I'm a big proponent. A lot of people say this is, I don't want to pay any taxes till I have to. And I'm like, well, you can wait. You can pay more. That's your choice. I'm not gonna judge you for that. I'm just saying, it's not a mathematically based decision. But if you convert now, you don't have to ever pay taxes again. So you don't care. Well, you do care, but you don't care about this pocket of money, right? So I took literally, I retired, and you're probably tired of hearing my story, but I retired in 2012 and I converted over the course of the end of 2012 on into 2013. Every ounce of traditional I had over to Roth IRA, ate those taxes because I didn't have income at the time. Well, very little from starting my business. And I could write off all the income I made anyway. But I took advantage of that drop in salary. Most people don't have that, but got everything over to the Roth hat. And you know what? Don't pay taxes on any of that money again. And it's, I would like to think if I lived 80s, 90s, maybe 100, that's 4, 5, 6 decades of growth that I'll never pay taxes again. So lots of incentive to do it. Let's talk about how to figure out how much. Well, it is the end of the year. You should have some idea of what you're making for the year. So the question then becomes, do I convert now before the 31st, or do I wait till next year? Well, all of the math that I have in front of you with these tax brackets, again, this is Smart Asset, but I know the tax brackets are accurate. I just couldn't find a good looking chart on the IRS website. But you want to, it's this year's tax bill, it's 2022's tax bill you're concerned about. So unlike funding an IRA, you just wait until you can wait till next year and then fund the 2022 IRA. You can't with a Roth conversion, because anything you wait till January 2nd to convert goes on next year's tax bill and next year's tax numbers, which is next year's tax income. You don't know that stuff all that well, but what you do know is what you're a pretty good idea of what you're making this year. So if you are in the, we'll use married, just, if you are in the 22% tax bracket, which covers a lot of people, married, that's 83,000, 178,000. Okay. Pretty decent tax rate, right? Historically. So yeah, you would want to say you made 100,000, you could convert up to 78. I don't generally push right against the limit, so I would recommend maybe 70 in that case to give yourself some wiggle room there. But yeah, you could convert a chunk and then you do a chunk next year. If you want to get really diligent about this, you can take it all and put it into an Excel spreadsheet, make a 8% growth assumption, and then see how many years and project out your income, and you can go through that math if you want. Now I will say, don't the difference between the 22% tax bracket and the 24% tax bracket is very small. So I would consider that if you're making 100,000, you could convert all up to $225,000, because who cares when you're talking 2%? The one you don't want to trip is getting above this 24% tax rate, because it jumps to 32, right? So the difference between 22 and 24 is pretty small. So consider whether you're being cheap with that 2%, and then when you do go to make your next conversion, tax rates are up at 30, and you're like, why was that being cheap over the 2%, right? So if you want to talk that through, the time is now. The custodians have said that we're already past the deadlines to do Roth conversion. They say that every year, and I appreciate that, because they want all the paperwork up front. But no, you can do a Roth conversion all the way up to the end. Please don't do it the last day of the year. But if that's something that's on your mind, let's talk literally today. To figure out how much you want to convert, and we can work through all that, and you can know that you have a good plan for the year.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.